and welcome to this special show, Rajanomics, the first 200 days. The first 200 days of the new governor have been really hectic days. He has been a man in a hurry, walking in so many directions at the same time, trying to get the consumer price inflation accepted, in place of WPI, trying to sell the idea of flexible inflation targeting to both markets and policymakers, and then of course trying to change the banking structure, get NPLs reined in, and new ideas in terms of banking structure. Well, we have with us the man who has been trying to change the face of Indian banking, Governor Raghuram Rajan. Thank you very much for joining us today. Well, first up, let me start with the monetary policy that was just announced. You have indicated that risks to inflation are on the upside. Is there anything at all that is giving you confidence that this beast is coming under control? Anything in terms of rural wages or MSP trends which gives you hope?
Well, first, I think it's two-sided risks. So I don't want to say the risks are only to the upside. For example, if we get a better budget than is expected, I think it would create a lot of confidence. It would give us some room to make some adjustments, for example, on SLR, which I said yesterday.
That's all ask.
So that's one set of potential downside risks. Oil prices. You can see Brent today is 105. I mean, some stability on oil prices, even reduction, would help tremendously. So there are a number of risks that could go either way. That said, you can also see that disinflation is not just food disinflation. You're seeing some slowdown in services. Yesterday's CPI industrial worker came in, which was quite encouraging, 6.7 or if I remember correctly. So these are signs that something is taking effect. Now, I don't want to declare victory. We're far from it right now. There's a long haul ahead. But these are encouraging signs that things are biting. And let's see how it goes. I also believe that if we have moderation in the support prices for agricultural commodities, and there has been moderation last year. Yes. Let's see this year. I don't think we should see tremendous increases. That could also help. So, I mean, things are coming together, and that gives me some hope that we will get traction.
Yet yesterday's policy was full of red flags in the sense, you pointed out milk prices and then services, CPI services not showing a fall, chances of course, even the output gap having narrowed. The fear and today the bonds markets are clearly indicating that there might be an extended pause from RBI. Actually, as one person put it, 50% chance of an extended pause, 30% chance of a rate hike in the next 1 year, and only 20% chance of possibly a rate cut. Is that a fair assessment of the situation as you see it?
Right. I mean, what I think I can say is at this point we've set rates appropriate to hit the 8%. Of course, if we see a substantial movement in either direction, we'll have to rethink our stance. I think what is important to focus on is that once inflation comes down, there will be substantial benefits to the economy, both from the increased savings, which will help create more capital for industry, as well as this uncertainty about the future path of interest rates will be diminished, and all this will be helpful. So let's not focus primarily on what the level of rates will be, but focus on all the collateral benefits also, that once inflation starts coming down. So let's wait and see.
No, I'm personally not fascinated by falling rates at all. I'm actually a saver. I don't have EMIs. But that apart, there is one interpretation.
Spenders are also important in the economy.
No, right. There is an interpretation by some economists after you gave your glide path of 6% by 2016 that you will not be able to move on rates, or you may not move on rates still you are, within a striking distance of 6%. Because if you did start lowering, if the economy were at 7.5 or 7% inflation, you may push it back to 8. So probably you will have, your pause will extend till 6% is at least in eyesight.
Right. So the idea is, of course, that glide means glide, that we wanted to move in one direction, while willing to overlook transient movements in the inflation rate, things that we don't think are likely to persist. Also, monetary policy generally is aimed at being stable and predictable rather than reacting to every little change. So let's see what paths. The point about saying 8 and 6 was to say that we'd be happy if we reach those levels over the period, that we're not trying to accelerate the process of disinflation through cranking up the interest rate machine as high as possible, but we think that over this time, we can do it with reasonable interest rates. So let's see. And certainly if we think that there is room that has built up because we can achieve it with even lower interest rates, we'll be happy to cut. But we have to make a judgment as and when the time comes.
Okay. Well, let me come to the other issue, the open market purchases. Now, the bond auctions in the last 2 years would not have succeeded if there were no OMO. How would you react this time? Because the number is, if anything, larger. Last time every week was 14,000 crores. This time every week is 16,000 crores. Every month is 76,000 crores. So,
okay, this is a market. There are buyers, there are sellers, right? Market's clear at a particular price.
Yes.
So your point about last year would be that if the Reserve Bank hadn't come in with its big stock of money, there would have been less buyers in the market, therefore the market would have cleared at a higher interest rate. That would have been problematic. But remember, this year, what would prevent the Reserve Bank from expanding at a rate consistent, its balance sheet at a rate consistent with inflation? It would be foreign assets coming in. Okay. But those foreign assets are not coming into a vacuum. They're coming in and buying bonds, they're coming in and buying stock and displacing Indian investors who are in stock. So money, if the reason the Reserve Bank is not buying domestic assets is because its foreign currency assets are going up, it must mean there are foreign investors who've come in who are now there to buy domestic assets. So the supply is not going to be constrained, the supply, or I should say the demand for bonds is not going to be constrained just because the Reserve Bank is out. There could be others who come in. So I wouldn't take it as mechanical that just because we're not doing OMOs, there's nobody else in the market doing that kind of purchase.
No, but basically, it's a sound principle that Urjit Patel's report has enunciated, that open market purchases are for managing liquidity and, of course, to meet the RBI's money supply target and not to manage the government's borrowing program.
Yes, absolutely. But that has been the case with the RBI. That has been the principle the RBI has enunciated, for some time.
But if that means tolerance of higher yields, RBI is ready for that.
No. So we are not targeting a government yield either. We do want to prevent volatility in every market, undue volatility. But that said, the idea has always been that there is a certain pace of growth of the RBI's balance sheet, which is consistent with an increase in money supply that is needed for the legitimate needs of the economy. And we will focus on creating an increase in size of the balance sheet consistent with that. But, that said, the thing that is changing this year is, because of FCNRB, because of what we've given the oil marketing companies, our foreign currency assets are going up. That means there's less room for domestic assets, but that doesn't mean, and I want to emphasize this, that nobody else is buying bonds. The people who brought in the foreign currency are buying Indian bonds.
No, fair point. That might be a big help. But if you're using RBI's open market purchases to correct liquidity, then the intervention should be more at the shorter end, not at the longer end.
No, but there's short-term liquidity, which is we sort of take our cue from the call money market, for example, on where the interest rate is. That suggests whether liquidity is tight or not. And there's longer term, call it liquidity, call it credit facilitation, that our balance sheet has to grow to accommodate the legitimate needs of the economy, both in terms of credit as well as in terms of cash. And that growth in the balance sheet is longer term.
Okay.
It's permanent.
Yes.
And so we can't meet that by term repos. We will meet that by open market operations and by foreign currency
I meant
purchases.
open market operations should also logically concentrate in 1 year or 2 year paper and not really in 10 year, because the intention is liquidity mismatches should be corrected.
Maybe. It could be along the spectrum. It could be focused on illiquid bonds. I mean, it could be across. The point there, however, is longer term paper, because yields are connected. You can't, for long have 3-year money yielding 8% and 10-year money yielding 12%.
Okay.
So there is movement, there will be effects across the yield curve.
Okay, so you could intervene at any point. A final question in terms of macroeconomics. What's your experience in terms of how long does it take for a country to improve its potential rate of growth? We fell rather rapidly. If our potential indeed was 8%, we have fallen to sub 6 somewhat rapidly. Can it be cranked up in a hurry, or is it a 5-year process?
See, I'm skeptical about some concepts in macro, and one of them is potential, because it's so nebulous.
Okay.
And we really read potential of the mix of growth and inflation. If we have a certain level of growth with high levels of inflation, we say we are beyond potential. Effectively, that's how we do it. So I'd say that to the extent that some of the constraints on supply are quickly fixed, we could see estimates of potential go up fairly quickly. Now, if you think that the governance issues that are constraining supply are more permanent, then you would say potential has come down. But nothing tells me that what we're going through is not more than important, but nevertheless temporary in the life of nations, process of refixing our institutions, our structures and our contracts and so on.
Okay, you're not telling me the time, but it's okay. Let me get to the other big variable that has been your worry when you took office, the rupee. Are you now really worried of an overvalued or overvaluing rupee?
I am not worried about overvaluation at this point. I do think that it is important to worry about volatility today and tomorrow, and that at some point, if the rupee strengthens, when we were at 60, people said 75, 80. And now we're back at 60, they're saying 55, 50, and I heard some 45s also. Yes. There seems to be straight line extrapolation in either direction whenever we're moving. There are levels at which you believe that this is a recipe for increased volatility in the future, and we would try and avoid reaching those levels. I think that a certain amount of leeway this way, that way is fine. We're not overly worried about that.
But the real effective exchange rate is something you watch. I mean, before that, absolutely. July. Okay, that is a parameter you would watch.
We watch a variety of factors. I don't think so. Exports have come off recently, and there may be some sluggishness for a while. I don't think that is primarily because of the recent movements in the exchange rate. It's too quick. These things take time to have effects. What we're exporting today is what was contracted 3-4 months ago, and today's exchange rate has nothing to do with those levels of export. I think it's more to do with a slowdown in industrial economies in the first quarter of this year. Nevertheless, a substantial strengthening of the currency to the 45s and the 50 levels might impinge on exports, especially because some of our competitor emerging markets have had depreciated currencies. So
here you watch definitely.
We obviously don't want to reach the level where we think you'll have renewed volatility because it's too strong. So, we will take precautionary measures to reduce volatility, at that point. But, I think you have to be somewhat agnostic over a range.
Okay. Well, we have to take a break on that note, Governor. We've asked some macroeconomic questions, but Governor Rajan has moved a goodish bit on banking structure and the financial sector. All those questions to him after this break. Welcome back to Rajanomics, the first 200 days. Governor Rajan has spoken to us at length about the economy, but his focus actually from perhaps the past 10 years has been reforming the Indian financial sector. So now those questions, Governor Rajan, first up, the bank licenses. How soon should we expect you to announce the list?
As soon as the committee of the central board sort of as soon as they decide.
So, when is the board meeting? So we can have an idea.
There are board meetings planned. As soon as the board meeting is over, it could be one meeting, it could be multiple meetings. Again, throughout this process, I've said we don't want to do it any slower than needed, but we don't want to do it faster than possible. I want every channel to take the necessary time. The point here is not so much...
the board may mull over it for some time.
May mull over it, but let's wait and see what they do. Okay. They will take whatever time they need. Okay. The point I want to make here is we will do everything as fast as we can with the appropriate due diligence. But given how much scrutiny has been imposed on various licensing processes, various processes of government action, I want to make this as transparent. There are some aspects which can't be made transparent, but as the process itself should be transparent. I want to make the process transparent, give people confidence that due diligence has been done. We can conduct a clean operation. And at the end of it, whatever comes out, comes out in terms of our actual output. But let's do it cleanly once we have experience. And this is important. People should see this as a proving or learning ground for the process of giving out licenses. We have a number of staff now who've gone through the process, who understand how to do it. Next time we can do it more quickly, we can do it more effectively. We know what to ask for. We know how to approach the regulatory agencies. And therefore, I feel confident that when we say we'll open licenses on tap, we'll have differentiated licenses.
Feeding me, I'm not at all faulting you on the time that you are taking. On the contrary, I'm asking why can't you take a couple of months more, considering that it has taken so long. There is out in the open statements from a potential next, a policymaker or, party which could form the government, saying that, the Reserve Bank ought to wait. Equally, Mr. Nitin Gadkari said that if the EC asked us whether they should issue licenses, we would say go ahead and do it. There are many voices within the BJP as well, but there are prominent voices, even Yashwant Sinha, who have said that, in the standing committee we found fault with some categories. So why not wait for the next government?
See, governments, we have to work with the government of the day. Yes. And not with future governments. This is a process that has taken place over a long period. It is a process that was government initiated partially because the finance minister, Mr. Pranab Mukherjee, suggested that this would be a good thing in his budget speech, but it has been taken up by the Reserve Bank and followed right through. We have followed a process which we believe is tight, clean, and it has come to its logical conclusion at some point.
No, I'm not faulting that at all, sir. It is entirely an RBI terrain. I'm making no mistake about it.
But in that case, why does it matter which government then emerges? We should finish the process under our own steam whenever the process finishes. For us, in a sense, the election doesn't really exist on this issue.
No, I agree with you, but yet there is a political process as well. There is a real politics. It was started by, as you said, the budget. The standing committee has commented on it. Yeah.
The implication is that we should wait, let in whatever new dispensation come, then they will scrutinize the whole process and see whether they're comfortable with it and change this, change that, etc., etc. So in that sense, what you're asking is for a rethink of the whole process. But then if everything that we do is subject to this kind of rethink, we wouldn't move forward. My whole point is this is completely a process driven by the RBI. Beyond the initial initiation, there has been no sort of back and forth.
I'll tell you where I'm coming from. I'm agnostic to whether licenses are given today or were given last year or given next year. My point is, several senior IAS officers, retired officers said that, once the election is announced, we don't even send the files to the minister if he were to ask. Separately, the Reserve Bank engages with the government on many issues, and you have, I would say, almost the best agenda that we have seen in several years. You want the right inflation to be targeted. You want a committee formation, which is, the more sophisticated way of making monetary policy. On deficit, you have a lot of issues to engage with the government, which are worthier battles. So why open a flank? Maybe this won't be a battle.
Yes, exactly.
But why open a potential flank?
No, but it's precisely because I don't think this will be a battle that I'm happy to engage with anybody, and I'm happy to convince them that this is not something which is government driven. It is a purely regulatory process, and regulatory processes should not sort of come to an end because there's a change in government. In fact, put differently, it's almost saying, look, let's emphasize the regulatory aspect, and this will be a precedent for things to come, that the regulators will continue and will form a backbone for whatever new government comes in, so that markets and everybody have confidence that there is continuity.
No, fair enough. I hope it works itself that way. It's just that if it becomes an irritant, it is an unnecessary irritant, that's all. Well, let me come to other issues that have been spoken about. What is your game plan with PSU banks? I believe you have, started a process or written to the Finance Ministry. What do you think would be the first 2 or 3 things that you would want to get done to strengthen public sector banks?
See, the first thing to note is the public sector banks have a wealth of talent, wealth of capabilities. In fact, many private sector banks run on people poached from the public sector banks. So let's first acknowledge that these are national assets, and we need to retain the value that they create. At the same time, there are a number of constraints that are clear to anybody who's spent some time in the public sector banks. And Dr. Chakravarti has been leading the charge in sort of pointing them out, which is, for example, the short tenure of the CEO, the fact that public sector bank boards may need different kinds of talent on them, that the chairman and the CEO being combined creates certain governance issues which are not as prominent in private sector banks, but also how do they attract talent? For a number of years, public sector banks were not allowed to hire at certain levels. And there is a big sort of gap coming up. They have good young people, good older people, but nothing in between. So how do you fill those kinds of things? So, and as the environment becomes more competitive, they have to compete in the marketplace for talent. Everybody's poaching their people.
Yes.
So how do they retain?
So you have asked for market remuneration, lateral hiring?
These are all issues that we have to discuss with the government. These banks are sitting on enormous national assets, and for those assets to deteriorate would be a national calamity. So we have to ensure that these banks have the capacity to compete, and many of them recognize what needs to be done and have started on the path, but we should support them. And
would you seek to convince lawmakers about the wisdom of bringing down government stake in PSU banks?
So, is it ownership that is the central problem? I think that public sector banks could live with government ownership provided they had some of these flexibilities that we're talking about, longer tenures for CEOs, more market-based compensation, etc.
Composition of the board?
Compensation of the board, that's something that the PJ Nayak committee is looking at. I want to make a point, which is true of private sector boards and public sector boards. We ask bank boards to take enormous responsibilities. I was on a bank board. You get a folder this thick a day or two before the meeting, and you spend nights reading it because you want to make sure you're not missing anything important. But everything has to be done by the board. And what do we pay these guys? We pay them sitting fees. Now,
why composition of the board?
But start with, how do you change the composition? You've got to attract people who are, reasonable people. But some people will do it for public service, but if going to do public service, you get hauled up by this investigative agency and that investigative agency, and you get paid peanuts. Who are you going to attract? You're going to attract people who are either extremely committed saints, and I'm not sure how many saints have capacity in banking, or you're going to attract people who have interests. And neither is necessarily best suited to run a bank, whether private sector or public sector. So these are issues we need to examine. And
okay, let me come, since I believe I'm running out of time, to the other big sector that is under your focus, the non-bank finance companies. You have put out an order that you will not register fresh NBFCs for the next 1 year. What is your plan with respect to these linked to, of course, the board committee?
Well, if everything was crystal clear about the plan, we could move ahead very quickly.
Bit broadly.
Broadly, we have to look at the whole gamut of non-bank finance companies, including down to MFIs and up to these 70, 80,000 crore housing companies, and figure out how the whole structure sort of fits together, how they're regulated, what the scope for regulatory arbitrage with banks is, and so on. The idea is not to bring the heavy hand of regulation on them.
But why did you stop registration?
Because we first want to make sure that we've got everything sort of tied up, including what the definition of non-bank finance companies are, a variety of issues of this sort. I don't expect this to be a long-term halt. It is in the very short run, as we've got a number of committees looking at these things and coming together. Once they pronounce, then we can move forward. The Usha Thorat committee has proposed certain things. We have committees on MFIs. So we are having an internal discussion on how do we bring all this together, what do we regulate, what do we not regulate, what do we accept responsibility for without directly regulating. We need to think about this. So the point is to create an overall regulatory structure in which, and this is the point where we come to differentiated bank licenses. At one end we have payment banks, which are narrow banks in many ways. At the other end you could have NBFCs, I think the Nachi Mekyet More committee calls them wholesale banks. Yes. And in between we have our universal banks. But we should make sure that it's relatively seamless on the regulatory front and there's not much scope for regulatory arbitrage. And that's what we're trying to think about.
So you think that you will be able to announce differentiated licenses, say within a year? And will it be all these categories? You will permit wholesale banks, payment banks, universal banks?
We're looking at all this. Yes, a year would definitely be, we should be able to do it within that. But I think that, what is important, and this is something the banks have told us, but we are very aware, is to create a seamless structure. Let's not have a shadow banking system, which is huge, which we have very little control over. And every time we press on the regulated side, it goes into the shadow system. So in some sense, we're trying to rethink so that we can bring everything under an
and
umbrella.
This will coincide with on-tap licenses as well?
This will This will be now on-tap licenses is slightly different in the sense that for that what we have to do is basically put in place a more permanent mechanism. So the staff who did the analysis for these licenses will bring them together, but we'll also review the guidelines that we put in place this time to see, how the experience has been and what sort of, fits together. Obviously, with the idea of continuity in regulation rather than changing everything every time.
So logically, this could come earlier than those differentiated
Absolutely,
banks.
absolutely. But it does take a certain time to do a full scrutiny. But my hope also is that the differentiated license will serve as a proving ground. I mean, one of the things we saw this time is that there is need for a variety of options for people to enter. For everybody to enter a full service universal bank license may not be the most appropriate.
Okay. Well, we've spoken about reforms of NBFCs, reforms of PSU banks. What about reform of RBI? It's a long while since a rank outsider has come in, so you may have some ways of reforming the central bank as well, changing.
Well, we have a lot of internal discussion going on. Maybe I've set up too many committees, but we have a bunch of committees which have reported back, including on internal organizational structure, the kind of recruitment we do, whether we should move towards, flatter hierarchy, more sort of specialization, more contractual employees under certain circumstances. Those are issues that, in fact, we're using the next few months when we don't want to necessarily do a lot on the outside because of the impending elections and new government to look inside.
Okay, you're not giving us a game plan of how the new RBI will look.
Well, we're discussing it, so I don't know until we fully discuss it, but it is something that we're looking at.
How quickly and how will you reform priority sector rules?
I think we have some suggestions from the Nachiket More committee. We have some suggestions from an internal committee that we have to explore. The whole idea has to be that first, we have to be clear about what the objective of priority sector is. And there are really two objectives. One is inclusion. The second, sometimes enunciated, sometimes not, is also what is important for the country at this juncture. But put those two together with the fact that these things vary over time. So inclusion is certainly the poor, small and medium enterprises. But in terms of national priority, sometimes exports was in, now it's out. Sometimes agriculture, agriculture is a big part of it. What about infrastructure? These are things that go in and out, and we have to sort of formulate some kind of a policy on this. But more important is once we have these weights, which to some extent will require dialogue with the government. The more important thing on priority sector is to make sure that the objectives are achieved efficiently. It makes relatively little sense to ask a foreign bank, which is largely city-based and has a certain kind of catchment pool for their employees, to go to a remote village and try and make loans there. They may be better off trying to automate accounts and spread in smaller towns, but perhaps not very effective in a remote village. On the other hand, there may be NBFCs.
So you would allow them to barter these capabilities?
Something that we have to make sure that people can do what they do best, more of it, so long as it meets the tag of priority sector. So let's figure out how to do it more efficiently.
Okay. Well, I've preserved perhaps the most important question as the last question, NPLs. How worried are you? Are you getting a sense that the worst is behind us, that we will start things peaking off?
First, I think growth will lift a lot of boats.
Yeah, but that's at the moment elusive.
Well, hopefully we're seeing some signs. Infrastructure, the core sectors picked up in the last month. Let's see. There's been a fair amount of work by the Cabinet Committee on Investment. That should start paying off. I don't think, as of now, it's a stability issue, because it's largely located in the public sector banks, and the public sector banks, when push comes to shove, have government backing. So I don't think we are in danger of anything like a financial crisis or anything of that sort. At the same time, you don't want the call on the taxpayer, as well as the need to build up capital towards the Basel III norms, to be higher than needed. And this is why we are very focused on trying to resolve the NPA problem as quickly and as best as possible. That's why the framework came into operation yesterday. The idea is bring the banks together, make them work together with the promoter to put the asset back on track, and to absorb losses in a fair way. I don't think the banks should absorb all the losses. The promoter has to also. And remember, the promoter is supposed to be equity.
Yeah.
Equity stands behind that. So this has to be done in a transparent way, legitimate way, but with the idea that let's move forward, put the assets back on track.
Yeah, but are you at least satisfied, or have the satisfaction that the worst is over, or you think there are a couple of more difficult quarters?
Some of the bank chairmen are saying that they are getting some traction and that they're bringing some of these NPAs down. But I don't know if it's uniform across the banking sector. What I do know is across the board, they are very convinced of the need to recover, to resolve, to sell when necessary. So activity in these areas is picking up. Everybody understands what they need to do, and I think that's a very positive feature of what's happening.
Is your repository up and ready, and is that...
It is.
Okay.
Now, we have to see if there are any teething problems, and we'll have to resolve them. For example, some banks have said they can't automate the process right now, so they will send us Excel files. Okay. Fine, we'll work with Excel files for some time. But the idea is that it starts, and then we work out the teething. So this is not, sometimes we want to conceptualize something for a long time and see it's perfect before it starts. No, this is something that we have to move, and as things come in, we will make changes.
Okay. Well, let me end on a positive note. The market and business community was pretty enthused by the positive things that you announced in terms of FII hedging exposures in the currency exchange, and more importantly, the valuation of foreign investments in unlisted companies will be on market-based principles. Should that community expect more things on this front?
Well, I don't know. We look at issues as they come. In some cases, we have a framework. Sometimes we take it as it comes. So let's see.
When will that notification come, though? The market principles. I mean, is it very soon, or?
Hopefully, very soon. I can't give you a date offhand, but hopefully very soon.
Obviously, you have a lot of things on your mind. Thank you very much, nevertheless, for finding time for us.
Thank you very much, Lata.
Thank you. Okay, are we done?